Hi everyone and welcome to the weekly update with me, Richard Perry, market analyst at Tech Markets. Each week I take you through the key events that I believe will be driving your investments in the coming days, and certainly moving into this Monday, bit of consolidation in the markets. We've got this Eurogroup meeting with Greece to basically thrash out the negotiations over their debt. And the bailout that comes up for expiry on the 28th of February, so Greece needs to get this through. Now, usually you would expect, or certainly history tells us, that the ECB and the Eurozone sort of political situation means that we're going to get probably a bit of a fudge, a bit of a kicking the can down the road sort of agreement, and it'll be interesting to see if that happens again. Greece isn't in a great negotiating position, certainly with the Eurozone's banking system certainly much more healthy in 2015, but certainly the Eurozone and the EU will be quite happy to get the Greeks in terms of making sure that they don't leave the Eurozone. So we'll wait and see how this one pans out. You may not get a result today, and it may continue to roll on, but certainly the markets are cautious in front of this. No real movement, no real temptation for traders to really take any big positions, it would seem. So maybe this one will pan out and be a bit consolidation in the markets for the coming hours. Anyway, so that is one thing. Then also we've got the fact that we had this ceasefire come into force in eastern Ukraine over the weekend. Has it actually done anything? Well, it certainly seems as though the fighting is continuing, and there was a run-up in the stock markets at the end of last week as this ceasefire was sort of being bandied around. But since then, certainly on Monday, the markets have come slightly lower, perhaps as this fighting has seemed to continue. There seems to be no real let-up in the tensions. So as to exactly what this ceasefire achieves remains to be seen, but we'll see how that one pans out as well. Now, in terms of economic announcements this week, the major one, certainly the FOMC meeting minutes on Wednesday. We're going to get some more meat on the bones in terms of Fed monetary policy. We had Fed meeting statement that last time came out very slightly more hawkish than the market had been anticipating, and certainly we'll be interested to see exactly why that was the case and what the Fed's thinking going forward, and perhaps it will give the dollar a bit of direction. Dollar's been sliding a little bit into this into the last few days, so it'll be interesting to see if that drives a dollar bull run once again. So where are the Forex markets leaving then? You've certainly got the euro that's just consolidating at the moment. In the last few days, it's basically been consolidating between $1.1260 up towards $1.1530, and it's sort of mid-range in that at the moment, showing no real signs of any selling pressure, but also equally there's no major buying that's going on either. Now the big move is coming in cable at the moment, with sterling making a big upside break, moving outside to several key breakouts on momentum indicators, which is positive, and it certainly looks like it's building for a test of the key next resistance band, which is 154.85 up towards 156.20. So that is looking like how cable is moving, and certainly buying into dips seems to be the way to play cable at the moment. And on to dollar yen. We had a sharp slide in dollar yen the back end of last week, and that came on the news that, or the apparent news that, the Bank of Japan is a bit reluctant to see further quantitative easing, seeing it as potentially being counterproductive going forward, and that certainly strengthened the yen, dragged dollar yen back lower. It's sort of into the support band now between 118 to 118.50. That sort of needs to hold now, otherwise we're going to start to see the outlook sliding back into a more sort of negative near-term bias. But certainly at the moment the bulls are still in control, but we wait and see how this one pans out in terms of the support anyway. And then we're going to move on to indices. Now the indices have been a very interesting one, because we saw a breakout on Friday on the S&P 500, Wall Street closing at all-time highs, and that sort of brings about the fact that we've had a bit of a choppy earnings season. A lot of companies have come out in their outlook statements saying that the strong dollar is impacting on their profit margins, and certainly it seems to be that that's been sort of weighing on the markets recently. But certainly this the geopolitical positive news that came through at the back end of last week with regard to Ukraine, and also the potential, it seems as though the Greece may well get a positive outcome from its negotiations. Again, we'll wait and see on that one, but certainly the Greeks seem to think so. But certainly that has helped to move the Wall Street markets into new high ground. Now, in terms of the DAX has been pushed higher by quantitative easing and obviously the good news, supposed good news about this ceasefire in Ukraine. That's again pushed it towards all-time highs, but there are momentum indicators that are beginning to roll over. We might see a bit of a correction coming through. 10,552 is the first line of support on the DAX. Now on the FTSE 100, the same question I've had to ask for the last 3 weeks: is it finally going to make this breakout? Now, for the last 3 weeks, it's basically been chopping and changing, moving sideways, not really making any real ground. And the 6,905 level remains intact, and still it looks like it's remaining intact again. It's just coming off the top again. You've got a nice band of support initially at 6,732 up towards 6,777. However, it's still, you get the impression that it needs to make the break on this occasion, otherwise once again the momentum indicators will start to pull it lower. Okay, for gold, we've had a sharp correction actually in the last couple of weeks. And this correction, this near-term correction, is beginning to now impact on the medium-term positive outlook. It seems to be far more neutral, far more uncertain in terms of who's actually in control of this chart. Because you've got this 4-week, this correction that's into its 4th week now, and it's dragged below the 61.8% Fibonacci retracement of the big bull run that we saw in January, and it now is questioning who is actually in control. And certainly that question remark remains and continues to trade throughout the gold price at the moment. There's big resistance up around 12.45 up towards 12.50, so it remains to be seen. The bulls will need to break through that to regain the upside initiative. Okay, so for the economic calendar throughout the rest of this week, the interesting one there's several interesting factors actually. You've got, for the UK, certainly CPI on Tuesday will be a very important one, and also the unemployment rate and average hourly earnings, average weekly earnings on Wednesday. That will have a big impact, you'd probably imagine, on sterling. And then also on Tuesday, you've got the German ZEW expectations, big impact potentially on the euro. Certainly the ZEW has been improving in recent months, so it'll be interesting to see if that continues. And on to Wednesday, we've got the Bank of England meeting minutes and the Fed meeting minutes. So again, a lot going to probably happen on cable on that day. Then into Thursday, then into Friday, we finish off the week with the flash PMIs for the manufacturing sector for Japan, Eurozone and US. So this is forward-looking data, and it'll be very interesting to see how these economies are starting to pick up, whether this pickup in the Eurozone continues or not. And that could finish off the week on a fairly sort of volatile note. Anyway, I wish you good luck in your trading throughout this week, and I will speak to you again next time. Thank you.